What's going on, everyone? My name is Jeff. Netflix just reported their Q2 earnings report shortly after close today. It is the 17th of July. I've never really owned a big position in Netflix, always traded it. We're going to talk about that quite a bit in this video today. We're going to talk about why Netflix tanked over $45. I do not think the pain is over. I think there's plenty more to come later in this week. We're really going to break down the subscriber numbers, and of course you do have to keep in the price increase that kicked in as well. So you're going to see some revenue numbers that look pretty good, and even the EPS was not a bad number at all, but this drop in subscriber count was absolutely shocking, and Netflix is definitely seeing a slowdown. I think it is all the current incoming competition, and not just that, guys. Let's face it, this stuff is all very, very easy to sign up for. It's all very, very easy to cancel. So you know what to do, guys. Make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. So I'm gonna do this video just a little out of order from what I would normally do. I'm gonna try and illustrate to you why Netflix seen such a big loss in subscriber growth. Now, this would be one of the first places to start. Is that, of course, Marvel, Star Wars, Pixar, National Geographic, that's all gonna be going to Disney Plus when they launch. And then, of course, The Office is leaving for NBC Universal Streaming, and then Friends is gonna be heading off for HBO Max. Now, why is this important? The Office and Friends, that is the #1 and #2 highest streamed television shows on Netflix. Okay, so there's 208 episodes of The Office, there's 254 episodes of Friends. Now, The Office and Friends are not leaving the platform until next year, so this is a change that is not going to hurt their current numbers, but it may help explain why people are either leaving Netflix on a price increase, losing some of their best content, and Netflix seems very optimistic that that is going to loosen up some free cash and they can keep making more exclusive content. Now, I'm going to call false on that. I think if you lose your #1 and #2 shows off of a platform, like I said, exclusive content costs a lot of money, and really, guys, they can't make a show that can even compete with these two. So people are becoming less and less interested in Netflix. Most all of these streaming services are very easy to access, very easy to subscribe to, and very easy to cancel, okay? And so I guess really the theme of this video is right here, guys. Netflix traded down. We just seen on the chart a minute ago, it was around $319 to $320. At one point it was down to $314. Is this going to be a good place to buy Netflix and go along with them? Should you be buying calls or puts? I really want to dig in, answer that question before we get finished with this video. Now let's talk about this without even really digging into all the intimate details, what each service provides and doesn't provide, but just the fact that this streaming service, this entire market, guys, it's oversaturated, okay? And Disney has not even launched their big service that's coming in the second half of 2019. Any way you want to look at this, guys, Netflix does have some really, really good exclusive content, but it is in a very, very saturated field. For example, I'll point this out, Amazon Prime Video, that comes free if you're an Amazon Prime customer, okay? You just automatically get that. And the cool thing about Amazon Prime, one of the more attractive things about it is that you can buy any new released movies that you want to see. But, Hulu, Sling TV, Amazon Prime, Sony PlayStation View, Fubo TV, CBS All Access, Philo, Netflix, YouTube TV, and HBO. Now, I'll also stop there and talk about YouTube. Now, this is specifically talking about YouTube TV, which is the cable service, but just the regular YouTube platform. Well, guys, the great thing about YouTube is that you're getting new content uploaded every day, right? And also, me being a content creator, I have purchased YouTube Red. I highly suggest some of you that spend most of your time on YouTube. Of all these platforms, my favorite is YouTube. And then second would probably be Amazon Prime. As soon as I get done with this video and I get some spare time, I can go to my YouTube, and I bet several of my favorite creators have made new videos just in the time that I have worked on this one. Now I can go jump on Netflix, guys, and it's the same garbage that's been on there for 3 or 4 months. And yes, I do like to binge watch some of the shows. They do have some really good exclusive content. My point is this: once you've binge watched the shows you want to see and the comedy specials you want to watch, what is the reason to even use it anymore? You're just watching the same stuff over and over. I feel like you can subscribe to Netflix maybe 1 or 2 times a year and get pretty much all the value out of it. I just feel like it is very, very limited in comparison to several of these other platforms. And of course, HBO, having the Game of Thrones, that is the biggest show on the planet right now, and nothing is even close to that. So the bottom line is this: Netflix is a great service, has always been a great service, but there is too much headwind, there's too much competition, there's too many choices, and there's too many different ways to be spending your time now. Alright, so let's start digging our way through this earnings report. I'm not going to take a very long time. I think you all have a pretty good idea of what is to come here. Just make sure to go down to the comment section and tell me your thoughts on Netflix. Is it a buy now? I have a couple little things I'm going to mention towards the end of this video I think you all should pay attention to, because there's some things I think everybody is overlooking just a little bit. Netflix came to the table with an EPS beat of 4 cents and their revenue was in line, okay? So at first glance, I do believe the analysts were expecting $4.93 billion and they came in at $4.92 billion. Their revenue was in line. Does appear to be a successful quarter. And immediately I started seeing the price of the stock drop very quickly. And I kind of feel like there's going to be a few more days to really know the full story here. Of course, keep in mind, Netflix is one of the original FANGs, and just about every hedge fund in the entire world has a holding of Netflix stock. So there's going to be a lot of action going on over the next couple of days. Anytime Netflix has taken a big hit, I notice it does get bought back up pretty quickly, but this is very, very different than any situation before. Netflix stock dropped 10%, then of course it dropped much more after that as Q2 subscriber count missed the mark. This is what I really want to key into right here. The company was expected to add 5 million subscribers, but just added 2.7 million, also below the 5.5 million from Q2 of last year. I think right there, guys, is pretty much going to tell you everything you need to know about the massive price drop. Expected to bring in 5 million subs and brings in just a little over half of their expectations, okay? Ended the quarter with a 151.56 million global paid memberships, and the year-over-year growth is still 21.9%. And again, like I said, the revenue numbers were pretty good. They didn't beat on earnings, but they did come in line. They grew 26% to 4.92 billion, and ARPU rose 3% as reported. The missed subscriber forecast was across all regions, slightly more in regions with price increases. It doesn't believe competition was a factor. I do think competition is a huge factor, so I don't agree with that at all. But that the content slate drove less growth than anticipated, with perhaps some pull forward effect from the outsized 9.6 net adds last quarter. So for Q3, it's expecting to grow 7 million paid memberships. Okay, so that is versus 6.1 million in Q3 last year. It sees Q3 revenues at 5.25 billion, an EPS of $1.04. So their guidance did see a move up. So the revenue still might be there. The price tag is going to start going up more and more on Netflix. I think that is part of their strategy. Now, there has been some speculation if they're going to start adding advertising, because Netflix and HBO are both advertising free. That remains a deep part of our brand proposition. When you read speculation that we are moving into selling advertising, be confident that this is false. We believe we have more valuable business in the long term by staying out of competing for ad revenue and instead entirely focusing on competing for viewer satisfaction. So that is one of the great things about Netflix. It's always been relatively inexpensive, and they do keep ads off the platform. That's probably an area where they have YouTube beat. Then again, like I mentioned, I pay for YouTube Red, and that's like $14 a month. Best $14 that I spend every month. All right, so here is the aftermarket action on Netflix, guys. It traded down to $318, still seeing a little bit of volume right now. I think the market has one more minute before it will completely stop running in aftermarket. But are we going to go out? Are we going to run out and buy Netflix stock tomorrow morning in the 310 to 320 range? Is this a good place to start? I think you want to wait really for two reasons, okay? First things first, you have to wait for new analyst ratings to come in, okay? I think you're gonna see Netflix downgraded quite a bit. You might see some random upgrades. You might see it at neutral, or it might go from an outperform rating to a perform rating. But just keep in mind, this was a very significant quarter with a huge drop in subscriber growth. So the revenue numbers were still there, but I would really be patient here, even at the $319 level, because analysts are gonna come in and probably issue a new rating on Netflix stock probably as early as tomorrow, okay? So I think you want to be patient right here. You might just want to be patient and be cautious, is because Disney Plus is supposed to launch by the end of this year. That is going to be the real head-to-head competitor with Netflix for the strongest level of exclusive content. Of course, Disney is up 30% on this year. This is really a growth and a value play. And so let me make a suggestion. If you're on the fence about buying Netflix, I would say just wait, maybe place some options on it when the price tag gets really, really low. But before you run out and buy Netflix, I would start building a position in Disney, okay? But anyways, guys, that's all I got for the video. Make sure to share your thoughts and comments with me. What is your plans to do with Netflix stock? I'm really super interested in hearing about that. Thank you as always for watching the video, and have a great day.